In this video, I will show you all the things you should know for investing in 2025. I will review this video, all you need to know for 2025 investing, from Sven Carlin, one of the best value investor on YouTube. In case you don't know who Sven Carlin is, please watch his YouTube channel. And in case you don't know who I am, my name is Christophe Nour. I've been investing in the stock market for almost a decade and have achieved a great performance, 25% per year, investing in great stocks. And I've been watching Sven for some years, almost a decade now, so I love his content. And let me just start this video. Just before this, for 2024, let me sum up the trends, for it will be helpful for 2025. For 2024, it has been a year driven by the S&P 500, by America, by the Magnificent Seven, by Nvidia, by the advancements of AI, and all the tech companies went up. Earnings went up for these tech companies, and valuations went up accordingly. So now we reach a high valuation for tech companies, and the other part of the market, the ex Magnificent Seven, like the S&P 493, is not growing very well. Let's say it this way. And in this video, Sven is sharing some great charts, some great stats, because if you look at the performance for the S&P 500 for the past 10 years, you see that the average return is 13%. So in 2023, we had a gain of 24% for the S&P 500. In 2024, we are again above 20%. This is not normal. On the probability scheme, this is unlikely to come again. This 2025 is unlikely to have more than 20% gain. Again, nobody knows anything, but this is unlikely to have 3 years in a row. If you look at the at what Wall Street is expecting for 2025, Wall Street doesn't know anything. And when you don't know anything, you just expect the trend to continue. The average strategist target for 2025 is a little bit above 6,000 for the S&P 500. It means upswing of 10-11%. That has been what analysts on Wall Street has been saying. When they don't know, you would say it will go up 10%. That's fine, because on average the S&P 500 goes at 10%. That's fine. But the analysts are often, very often, most of the time wrong, because they don't have a crystal ball. So it's impossible for anybody to predict the stock market. Now Sven Carlin is talking about the Shiller PE ratio. This is a PE ratio, but you take into account 10 years of earnings for the business. He says that the Shiller PE is very, very high because earnings have accelerated and valuations are high at the moment. So definitely I agree with Sven. We are not in a cheap market right now. I somewhat disagree because I find some pockets in the market that are being cheap. So I don't see this as a good indicator for the global index. But Sven is doing the same thing. We are doing some good stock picking, diversifying across assets. So that's fine. But I see his view. He said the current Shiller PE ratio is at that's the second most expensive market in history. Yes, that can be scary. So we want to be careful. In this year of 2024, one of the big themes was inflation, the other one was interest rates. This is correlated, obviously. Interest rates were up and now interest rates are going down a little bit. You have some easing from the Federal Reserve. The Fed will have to pay their interest on the debt. You want interest to be a little bit lower, because the debt in the US is very high, so that's very convenient for everybody. And inflation is being tamed. Now the inflation rate in the US is 2 or 3% officially. So officially, the war against inflation is almost here. I mean, 2 or 3%, that's fine. It will erode some savings, but this is not similar to 2021 when inflation was 8 or 9%. So that's it. Interest rates will play a huge role for 2025, because now the market is expecting the Fed to cut interest rates 2 times for 2025. So people expect the downward movement to continue. Nobody knows if it will really continue. If we are in a situation where inflation comes back again to 4% because of supply chain issues, because China is waking up, because of anything, if inflation comes back, don't expect rate cuts, don't expect interest rates, and that can create a lot of chaos in the market. And he said that Warren Buffett, the best investor of all time, is loading up on cash. If you check the cash allocation as a percentage of assets, we are at an all-time high. I've seen some different data on this one, but either we are on all-time high or close to all-time high. Anyway, we are high. Okay. He did the same thing in 2005 and then deployed the cash before the financial crisis. So I don't think this is a good market timing to just follow his cash allocation. It doesn't mean that we will have a crash in 2025. It doesn't mean that things are in a huge bubble right now. It just means that Warren Buffett doesn't see a lot of opportunities in his pool of opportunities. Don't forget that Warren Buffett can't buy a small cap, a mid cap, like you and I can. He can only buy mega caps, large caps, ExxonMobil, Microsoft, Apple. And now he has sold Apple because of valuation concerns, I suppose. He bought the stock with a P ratio of 10, now it's a P ratio of 40 for a company that is not growing that fast. He said, okay, no, that's a little bit too high, too expensive for me. He said some tax reasons, but yeah, the vision is clear. It's not as cheap as before, so you cut a little bit. He sold half of his stake. So before Apple was 50% of his portfolio, now it's only 25. It's still the biggest holding, but it's only 25%. Okay, so you raise some cash. If you sell Apple shares, you raise some cash. He sold some Bank of America. So now he has sold two parts of his portfolio. He has some cash, and what do you buy with the cash? The market is expensive. Maybe he sees some opportunity in the small cap, mid cap environment, but he can't, because imagine if he bought a small cap, like a market cap of $1 billion. Do you think it will move the big ship that is Berkshire Hathaway? The portfolio of Berkshire Hathaway is $300 billion, $400 billion. You can't. $1 billion will not move the market. They can only invest 10% in the company. So if you have a company of $1 billion, you can invest in 10% of the company, 10% of the shares. That means $100 million. Even if you do a double, even if you do a 10x in this small investment, it won't move the needle for Berkshire Hathaway, for Warren Buffett. So he is forced to invest in big, large companies. And it turns out that these big, large companies, the Magnificent Seven, these are expensive. So what do you do with the cash? He is buying treasuries, waiting for some prices to drop. So it doesn't mean that he expects a crash. Let me be very clear with that, because he did the same in 2005. And before the crisis, when we were building this crisis, he deployed the cash. And when we entered 2008, 2009, he deployed even more of the cash. But this is not exactly some market timing here. Don't expect anything from this one. So yeah, maybe the crash will happen in 3 years. Nobody knows. Even Warren Buffett doesn't know, but he wants to be conservative, to play safe. Okay, so that's the next point of Sven Carlen. Warren Buffett is playing safe. He doesn't see a lot of opportunities. A lot of the stocks are expensive. By the way, if you're looking for a complete framework to analyze stocks and build a strong portfolio, I have a coaching program. More on that at the end of the video. Do you have all the stuff here? You have Apple here. Apple is playing safe. Berkshire Hathaway is playing safe. Berkshire Hathaway has a lot of cash, and that's basically it. What I will share with you, and I will end the video with that, is that for Wall Street analysts, they will have an estimation, a forecast for 2025. You will see some bullish arguments. You will have Tom Lee from Fundstrat. You will have some superstars that are great. I love these guys, but nobody can predict what the market will do. So you will have some forecast for 2025. My forecast is they will all be wrong, and I don't want to make a video where I share my forecast. All the forecasts are wrong. You can check the old videos from last year, for example. What will happen in 2024? Nobody could have predicted what we had. Like such a strong year with the S&P going up so much, so nobody can forecast. My recommendation is you play safe because the market is expensive right now. You absolutely want to avoid expensive stocks. If you have the choice between investing in a company with a PE ratio of 50 or PE ratio of 20, I would not even hesitate. Personally, I don't want to invest in companies with a PE ratio above 30, above 35. So I stay within 0 and 30. That's fine. That's strict. That's my threshold. That's my buying range. I don't want to pay too much for these prices because when the market will swing, and it will come back someday, maybe next year, maybe in 2026, it will come back. When the market will have a drawdown, all the overvalued companies will be crushed. We've seen exactly the same phenomenon in 2022. So you never know. Any shock can happen. And in the market right now for the S&P 500, I see no wall of worry. I see nobody being bearish on the market. Everybody expects AI to continue, tech to continue, earnings to continue to go up. Maybe we'll have a black swan event, and you want to be prepared for this. You want maybe to have a little bit of cash, or you want to invest in strong companies without any debt. That's another way of investing in safe companies. You want companies with a normal valuation, so not an expensive valuation, P ratio between 0 and 3 and 30, and you want to invest in companies with a lot of cash so they can survive for many years and no debt. The only way a company can go bankrupt is with a lot of debt. So if a company doesn't have a lot of debt, that's fine. They can survive. So here is how I plan to invest. Strong companies, strong cash flow generation, but at a fair price or cheap price with a very strong balance sheet. I think this is a very good way to handle any market, whether we have a superb, magnificent year for 2025 or whether we have a recession in 2025. But be careful about the wall of worry, the black swan event. This is a very good video from Sven Carlen. I recommend you check his YouTube channel. He makes great videos, and that's it for today. I wish you a good day. If you like this content, I have an investing coaching program. In this program, you will learn a complete investing process. You will learn how to find good stock ideas, how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, in this coaching program, you will have access to my personalized guidance for long-term results. We will do weekly calls where we analyze stocks together, and you will have access to my private number available 24/7 for full support. If you have any questions, I'm here to help. Click the first link in the description below to get more information. You will get a short video that explains how everything works completely for free. No need for your mail address. Just click the first link in the description and I'll see you on the other side.